Hello, and welcome to the DC Bar Pro Bono Center's webinar today on an introduction to DC business registration and taxes. I'm Christine, and I'm a managing attorney here at the DC Bar Pro Bono Center and our nonprofit and small business legal assistance programs. Also behind the scenes, we have my colleague Lauren Paley, who has helped to make sure that everything for today's webinar runs smoothly and is set up. Before we dive into what we are all here for, a couple of logistics. First of all, this webinar will be recorded. You'll receive a copy of the recording in a follow-up email in the coming days. In addition, you can receive a copy of the slides right now in the GoToWebinar control panel under Materials. That handout will also be alongside the recording and available on our resource site later. If, as we go through the webinar, you have questions, type them into the questions box in the GoToWebinar control panel, and we will get to as many relevant questions as we are able. But today's webinar is informational, not to give one-on-one legal advice. And so let's do our best to keep questions general and not based on the specific circumstances of your organization. With that, thank you to Miles and Stockbridge and Mayor Brown for partnering with the DC Bar Pro Bono Center on today's webinar. Taxes are confusing. Business taxes often feel overwhelming for small business owners who are experts in the goods and services you provide, not in understanding government regulatory schemes, tax laws, registrations, and navigating that on your own. Fortunately, we have a couple of experts here today to help us navigate and understand the system better. We have Sonia Shaikh from Miles and Stockbridge, and she is counsel in their DC office and also a DC Bar Pro Bono Center volunteer at our small business clinic. And so she understands many of your needs quite well. We also have Sam McDougall, who is an associate at Mayor Brown here in DC. And he formerly worked with Sonia at Miles and Stockbridge. We are very fortunate to have them with us today, and I look forward to learning everything we can from the both of you.
Thank you, Christine. So good morning, everyone, or afternoon, and thank you for joining today's session. We're going to walk you through the life cycle of a typical DC business formation. So let's go to the next slide. Essentially, this comes from the first moment you decide on an entity structure all the way through tax filings that keep you in good standing. Specific to DC, there are two portals that you will be using when first forming and then continuing to file all forms, and that is the DLCP portal and the OTR DC tax portal. Next slide. This is kind of the map that we're going to be using as well. Now, we have a lot to cover, but this is basically a guide. Compliance in DC is less about individual forms and more about building a workflow and making sure you are completing the formation in the right order. A lot of times we get confused because everything is about registration, but which registration comes first? And this slide particularly is helpful in understanding that. Next slide. So here are our basic registration steps. We'll cover each of these in detail, starting first with deciding on a business structure. So this decision frames everything else. The entity structure and the entity choice. Picking between, say, a single member LLC or a C corporation is more than just the paperwork. It's more about matching legal liability, tax treatment, fundraising needs, exit strategy, and understanding your own long-term business plan. Next slide. And this slide just goes over all those considerations that you want to take into account when choosing an entity. It's more about taxes. So it's really important that you speak to an attorney or you speak to a consultant that can walk you through these considerations and that understands your business model and what matches your needs best. This chart is super helpful just for an initial glance over. Say you're not really sure where to start, take a look at this. It basically describes the entity type and how it's structured. So an S corporation is very similar to C corp. Sorry, go back. Or no, we're fine. It also lists the pros and cons in terms of just very blatantly understanding where are you liable, where are you protected, what entity is best for raising capital, just very high level. So this is a good starting point with maybe picking one or two that you think match your needs and then further discussing the other considerations that we mentioned on the prior slide. Okay, I'll give it over to Sam.
Thanks, Sonia. Sorry, it takes a little bit of a second to come up, but once you go through that first step of picking your entity and choosing your entity structure, you're going to move on to the DLCP registration, which is the Department of Licensing and Consumer Protection here in DC. And in order to do that, you're going to need to basically register your business and file your organizing documents that you came up with while you created your entity. And you can think of this as planting your flag in the District of Columbia, your articles of organization for an LLC or your articles of incorporation for a corporation help establish your legal existence. And you do that by registering with the DLCP. Information you'll need is, again, that entity form, which is why you got that first step, and then your owner, officer, member details, most likely your social security number, but maybe an FEIN, any former entity information, and again, your entity documents. And as you go through registration with the DLCP, you're going to have to file those entity documents. Here's a list of the entity documents that are needed for probably the most common types, your LLCs, your professional LLCs, your for-profit corporations. So just review this if you need more information on exactly what forms are required. There's a really helpful FAQ at the very bottom of this slide, but this slide will at least give you a starting point on, okay, what entity documents do I need to register for the DLCP so that I can go ahead and essentially plant my flag in the District of Columbia. And without the DLCP registration, you can't obtain an employer identification number from the IRS. You can't open a bank account in your business's name, and you can't collect a dime of revenue legally in the District of Columbia. So this is step number 2. And there are some registration exemptions that businesses should be aware of. Certain types of entities don't have to actually register with the DLCP, although it's rather limited. Those are typically your sole proprietorships, general partnerships, unincorporated condo associations, and then your unincorporated nonprofits. Everything else has to be. So take a look again, make sure once you've selected your entity choice that you don't fall into one of those exempt entities, but most likely you're going to have to register. Which brings us to the following step. And once you've gone through your DLCP registration and you've registered your business, the next step you should look at is your trade name registration. Many first-time entrepreneurs ask whether trade registration is mandatory. It's not. It's technically optional, but from a risk management perspective and a benefits perspective, it's a bargain at just a few dollars. I think it's a $55 fee. And the process is fairly simple. Once you've registered with the DLCP, you'll have access to your account, and the trade name registration is actually on the DLCP homepage. So you just follow the registration forms online. It can also be used for amendment, renewal, and cancellation. And some of the largest benefits that you get is it protects your legal trade name It gives you better visibility. So from a marketing standpoint and a business standpoint, it really helps. And it also allows you to take legal action under your trade and business names and allows you to enter contracts under those names as well. So again, while not necessary, highly recommended in most cases. And that would just follow your DLCP registration. Steps 4 and 5 are some of the larger steps, seemingly more intimidating, but when you sit there and look at it, it's actually fairly straightforward. And step number 4 is registering with the IRS and obtaining your federal EIN number. The IRS's registration portal makes it fairly straightforward and relatively painless. You can do it in probably less than 15 minutes. But the key takeaway is the sequencing. Again, as Sonia said earlier, the order of this is really important. You're going to need your EIN number before you register with the DCOTR. So that's why this is step number 4, not step number 5, and why you've got to do it before you register with the DCOTR. And in order to do that, again, you just will log in to the IRS, or you'll get on the IRS and you'll just file an online application. The link is in the slides. The portal makes it extremely straightforward. You can mail or fax it, but I would just recommend using the portal. And again, it's got to be done prior to the OTR registration so that you can get your FEIN number. Next step would then be, step 5 would be registering with the DCOTR, or the DC Office of Tax and Revenue. This is one of those portals that Sonia mentioned earlier that's also very, very important. The DC OTR is essentially where the tax life of your company begins. And their My Tax platform basically houses every return you'll need to file in the district, from sales tax to unemployment insurance and all of these other taxes we're going to cover in the back half of this presentation. And you're going to need similar information for that registration as you will for the DLCP, the FEIN, and the OTR. All of them require largely the same info, so just make sure you've got all of your entity documents, your employee or owner or member information. And to do that, you'll just go to the DCOTR tax homepage. You'll click the register a new business and you just fill out that online form. Again, it's relatively straightforward, and they make it fairly easy to go through that process. And just to round out, again, steps 4 and 5, you want to register with the IRS first, and then once you've gotten your EIN number, then we'll register with the DCOTR, since you do need that FEIN number in order to do that. And then once you've registered with the DCOTR, that essentially will start the tax life of your business and enable you to actually start filing and paying taxes in DC. Just a note too on nonprofit entities, you largely go through the same registration process. And there are some slight variations, like for example, during the DLCP registration, it's largely the same, except you've got to show in your articles of incorporation like one or more charitable purposes. So you might want to get advice on that, or at least look at 501c3. For your IRS registration, it's the same exact process in steps number 4, except you have to file for tax exempt status, which is a separate form on top of that. And again, with the OTR, it's the same process as in step 5, but you've just got an extra form at the end as well. And that brings us on.
Sorry, just one thing to note on this in our prior slides. You want to make sure that each step is not only complete, but you get approval from the agency. You get an approval document stating that this has been processed before you proceed to the next step. So in this case with nonprofits, before you apply for OTR registration, you want to make sure that your Form 1023 has been processed by the IRS to then file with OTR. And sometimes these steps, especially with nonprofits, can take several months. So there is a waiting period. You can't just get all of this done at once. You need to have first the filing in order and also have the approval to go to the next step.
Yeah, that's a really good point. Thank you, Sonia. So just again, with the whole timing and sequencing, make sure that you're doing each step in order and you're not jumping the gun or doing them out of order, because like Sonia said, it will affect your ability to actually register and move forward in the process. And that, just to kind of recap real quick, once you've done steps 1 through 5, you've got your business entity structure, you've got your DLCP registration, your trade name registration, if you choose to do that, and then your FEIN and your DCOTR, you're essentially registered to pay your taxes in DC. And the next steps are more of just a licensing and a permitting that has to be done if you're a DC business, but is not necessarily tax related, but still has to be done before you actually engage in business in DC. And that goes to the clean hands before you essentially open your business, unlock the doors, and get going in Washington, DC. There's 2 specific certificates that remain. The first one is that clean hands certificate. And in order to operate in DC, you have to have one. It essentially serves to show that you are in good standing in the District of Columbia. And it's the district's way of verifying that you and the entity that you control don't have debts that exceed $1,000. This again can be requested through the OTR website, the My DC Taxes portal that we were just covering. So not too hard to find. You'll just log into your portal again. There'll be a tab that says clean hands, and you'll just request your clean hands certificate. Just a side note, for non-DC businesses, those expire, I believe, every 90 days. So you will have to just keep renewing that. But it's something that you do have to have in DC before you go. The second is proof that you're operating in a legal location or lawful location, and that's either a certificate of occupancy if you're in a commercial space, or a HOP, a home occupation permit, which corresponds, if you're in a residential space, with the registered address in the district. And essentially that goes to whatever your registered address is that you've been using to register for all your taxes. That's the address that has to match up with your COO and your HOP. Again, the certificate of occupancy is required if you're operating out of a commercial location, and the application link is there as well. The HOP is required if you're in a residential space like a home office, garage, if that's your choice. And that application can be found there as well.
And
And
just,
the last,
sorry, Sam, I keep interrupting.
please go ahead.
I hope you interrupt me too. One quick note on the clean hand certificate, and this goes back to your entity structure. If you open an LLC or a pass-through, a partnership, sole proprietorship, any type of entity that passes through you, where you're the one essentially paying the taxes, not the entity itself. This can get a little confusing, but those are generally the types of structure where this happens. You need to make sure that your personal income taxes are also in order, because you can't achieve a clean hand certificate if you have an outstanding debt on your personal income taxes. So that's something to take in mind when you're choosing an entity as well. Do I have back taxes that I need to pay personally, or a spouse that we're filing jointly, they might have, even singly, they might have an outstanding tax. That's something to keep in mind as well. Keep going.
Awesome. And then just, I guess, a last little note as well. Oftentimes landlords will require your clean hand certificate or your COO or your HOP before they actually hand you the keys over too. So just from another step perspective or a timing perspective, the earlier you can get these, or the more on top of these you can stay on top of, the easier it'll be for you to just get started in the business process in terms of opening an actual physical location as well. And that brings us to the last step, which is just obtaining your basic business license in Washington, D.C. And you can think of this essentially as an annual permission slip to transact in D.C. And that application is going to ask for the same addresses and ownership information you did in your DLCP and your OTR registration. So just make sure to keep good records of that information, and that you are consistent in your provision of it, just because inconsistencies can cause the delay of this for sometimes weeks, even longer. So just make sure that your information for each registration lines up on top of that. Again, you're just going to need your business premises address, the one that was in either your COO or your HOP, your HQ address if your business is big enough to have one, and then your corporate information, your mailing address, etc. And then On a final note for this one, if you have what's called a regulated businesses or a regulated business, these businesses have different requirements for the basic, or I guess, than the basic business license. And their requirements can be found in the link that's in the slides, but essentially there's 24 different types of regulated businesses, and they cover very niche industries such as waste disposal or car manufacturers or car repo businesses. So if you think you might fall into one of those or just want to give it a quick look, the link is there in the slides, but just be aware of that as well. That's something to just make note of. And with that, I think I'm going to turn it to, oh, nope, I've got one more. Maintaining compliance. And this is important just to make sure that you can stay in business and don't have any of these issues pop up in the future. And in order to maintain compliance with registration in the District of Columbia, you've got a BRA 25 or like a BRA report. It's just a periodic filing that every 2 years businesses have to file, and you can think of it essentially as a census confirming that all of that business information that you just filed in the throughout the registration process hasn't changed. If you miss that filing, it can be an issue because you would, or your business would be considered administratively dissolved, and that can freeze your ability to enter into contracts as a business or defend from lawsuits as a business. So it's really important to confirm and update your information and to make sure you're maintaining good standing with DC. And then the timing, if you just want to look at the slides, the timing is provided in there as well. It's typically due April 1st, the year after you register for your business. And then it's April 1st every 2 years after that. If you've got a foreign entity, you can be subject to backdating. So that's something, if you've got a foreign entity, you might want to look into. But if you're just a DC business, then it's going to be April 1st and every 2 years after that. And that's just to maintain compliance, essentially acts as a census and make sure that your information hasn't changed. And if it has, you just want to make sure you update it. And with that, I will turn it back over to Sonia.
Perfect. Thanks, Sam. I just wanted to add one last thing to the BRA filings. If we could go back real quick. I know it takes a second for the slides. One really important thing that Sam did emphasize here, but I want to reiterate, is that this is to update your company information. That includes who are your officers, where are you located, addresses for your officers, all of that. And typically this becomes a hassle in new businesses because the officers will change quicker than the 2 years. And then when you have a problem, such as maybe you need to get another clean hand certificate to proceed with a contract with another business, or you want to open up a second location, so you need a clean hand certificate or a different license. But your BRA filings are not up to date, the officers have changed, and then you no longer have, then you have to go through the whole process of trying to prove that you're still an officer and authorized signer of this company. You can still proceed on its behalf. So it's very important that these are not only looked at every 2 years and to maintain your standing, but also whenever there's a change to your company to avoid these little issues that'll pop up later on. And I just want to take a moment, because we are running really ahead of time, but before we get to taxes, if there are any questions on the registrations.
All right. We have a couple. So first, if a business, it has formed, they've done the first couple of steps of registering their entity. You had mentioned, Sonia, that sometimes the steps can take a while, but is it okay if a business hasn't completed all of them, not because something hasn't been approved, but because they just didn't know and now goes back and takes the next steps?
It's totally fine, but you may just need to speak to someone at the agency first. And that's what I would always say. Rather than start a form late, if a step has been missed, talk to someone at the agency, so at the DLCP, at the IRS, at the OTR first, and they can tell you what you need to file or how to file it. Because sometimes if you file a form out of order, it can create, honestly, a chain wave of events that'll it won't collide properly because it's not done in the right order. So sometimes I'll have OTR tell me, just send me a letter and we'll manually put it in the system. The way DC and the IRS both work, which is great, is they have a really good electronic database. But the problem is that requires that order to be taken. And if it's not done in that order, then that manual step by talking to someone is much easier and will avoid a lot of confusion.
Okay. Another question that we'll get into a little bit in talking about the tax types, but maybe we can set the stage, is when a business goes through the OTR business tax registration, how do they know which tax categories they should check the box yes or no to?
So that's another thing that's great about DC. It'll first collect all your information and then it'll give you a suggestion of which tax types your business likely needs to register for. So it'll ask you, for example, do you have a physical location that you own? And if you say yes, then it'll enroll you for real property taxes. So thankfully, DC is very great at automating all of that.
Wonderful. Let's see. This is a little more specific in the business licensing, so we may or may not have a great answer. If a business or an organization doesn't have a physical address, everybody operates virtually, do they still need to provide an address and have a certificate of occupancy or home occupation permit?
That depends, one, on your type of business and whether you're, say, I'm running a home office in DC and I'm using my apartment in DC as that. You probably won't need an occupation license, but that's something that you should, when you're explaining your business on the DLCP and you're writing down in the articles or the formation documents rather, where you're primarily going to be doing business, but also who owns the business and where that person's residence is. That's when you'd note that down.
Okay. And do you have a general sense how long it's taking the IRS these days to approve Form 1023 and Form 1023-EZ, which is the form, the application for tax exempt status?
Yes. Given all the recent administrative changes at the IRS, we've noticed that that can take anywhere from a year to 18 months at the latest. But at the same time, you have to remember, once you have that form approved, that approval is retroactive to 18 months from filing. So it doesn't mean that you can't start your nonprofit activities a little bit at a time. And you can talk to DC about seeing if you're able to, fundraise before that exemption is in place. It's a bit of a process. It's a little bit, that's more of a complex issue, but it's just taking a lot more, it's just taking a lot more time. And the one thing to remember is that it is retroactive, so you can kind of start some of your activities sooner, even if it's not approved yet.
Okay. Do you have any sense of how long it's taking the IRS to approve Form 2553 to elect S Corp status?
That is a bit quicker. The turnaround time for that shouldn't take very long. If anything, I would say 14 business days at max. But that's a quicker type of turnaround.
Okay.
But also with that form, same thing. It goes retroactive to your date of filing if approved.
Okay, sounds good. I think for right now, we are in a good place. We have some more questions, but many of them relate to the topics we're about to jump into.
Okay, perfect. So we can head to tax types. All right, the fun part. Nexus, we'll start with Nexus. Okay, so the rule of thumb here is pretty simple. If you sell goods or services to a customer located in DC, or if your business is located in DC, even if you don't have goods or services, you should be filing taxes. Sorry, if you don't have customers in DC, but your business is located in DC, still you're required to file taxes. Now, what is Nexus? Again, it is either physical presence, such as employees, even independent contractors, storage warehouses, or even a satellite office. That is physical presence. Economic nexus is the other part of that. And that's typically associated with sales tax. So if you have $100,000 or more worth of business and revenue in DC, and we're talking pure revenue, we're not looking at taxable income, any of that. If you have $100,000 or more, or 200 transactions in DC, then you have to file for purposes of sales tax. 200 transactions can mean anything from 200 receipts generated, 200 customers, or if it's a subscription service, maybe you have 20 customers, but then you've had 10 transactions with each of the 20 customers. So ideally, I look at the 100,000 threshold, but if you notice that you're having several customers in DC, you should start looking at that 200 transaction threshold as well. Okay, and so we can go on to the actual types now. All right. So sales tax. So this slide kind of goes into more what sales tax is and some things that count as a sale. So note, we all know that things like clothes, electronics, books, that's going to be something tangible, physical, that's an obvious sale. Where it gets tricky is when you look at services and when you look at things that are not tangible. And sometimes those things are taxable for sales tax purposes as well. That includes services like dry cleaning or certain janitorial type services. It also includes anything like in the cloud, like say someone's downloading software from the cloud, or even a license to use software. That also counts as a sale. And the other thing to note with sales tax is it's not a cost that the business itself is incurring. The business steps into the role as a tax collector. So when you start charging sales tax, you're collecting the tax on the sale from your customers, and then you're remitting that amount to DC. It's only when you neglect to collect the amount from the customer that then you have to pay that amount yourself. Next slide. And that's kind of where the use tax comes in. That's the sales tax ugly twin. They're basically the same thing, but use tax really only clicks in when you forget to pay the sales tax. It also kicks in circumstances where you consume something in your business and no sales tax was ever paid on it. So one of the examples that I think is easiest to understand this in is free samples. If you are giving away, and Starbucks and Costco always give away those free little food samples, they technically have to pay sales tax on those items because they have to pay use tax on those items because they never charged sales tax on those items. Same as say you used a license of software in your business to provide a service to a customer. If you didn't pay sales tax on that software to whoever you purchased it from, you would then have to accumulate use tax on that license. And it can get a little tricky. There are some B2B, business to business exemptions, but generally that's the way these two taxes work. Okay, next slide. Okay, so then drawing this kind of all together. If you have Nexus, you need to have all three basically. You have to, one, have Nexus, your services or goods have to be taxable, and this is where we get into even more trickier parts, and the customer needs to be taxable. If all those things are true, then you remit sales tax. There are cases where your customer or the goods might not be taxable and you have Nexus. In that case, you still file a return, but you're not collecting sales tax on it. So say you have Nexus, you're selling a taxable good, but your end customer is a nonprofit or the federal government. In those cases, you may not need to collect sales tax. Instead, you will need something that's, you might need an exemption certificate or a resale certificate, but we'll get into that later. And that form, that certificate basically says, I do not need to collect sales tax because this transaction is not taxable for whatever reason, whether it's the goods or the entity. But everything still requires documentation. So you have to file something. All right, next slide. I think I'm going to give it over to, nope. So this just goes into the steps to file sales and use tax, and I'm going to hand it over to Sam.
Yeah, thanks, Sonia. So again, this just, like Sonia said, no matter what happens, you've got to file something. And so when you're going to file sales and use tax, essentially the brief overview, you're going to first determine if you've got a liability. So if you've got Nexus and your transaction is taxable, then depending on that, that overall tax liability, you'll determine the frequency and the corresponding form to file. You'll file it online, which is typically mandatory for most individuals. In that filing process, you'll calculate and remit your sales and use tax, and then you'll pay it electronically. We'll walk through the steps a little bit more specifically, but that's just a very brief general overview. So step one, again, you're going to file if you meet those requirements. You've got the sales of tangible digital goods or taxable services delivered or with Nexus to DC. Again, your two big components for Nexus are the physical presence or the economic Nexus, which is the $100,000 threshold or 200 transactions. If you get confused on that, again, just refer back to the actual slide on Nexus. It'll help clear it up. But for the first step, you just want to make sure that your transactions are actually taxable, and if you've actually got a liability that you should be filing for. And then going into your second step, you want to identify the correct filing frequency, because with the frequency of returns, your sales and use tax returns anyway, they can be either annually, quarterly, monthly, or in very select issues, I guess, per event, if you've got like special event sales. And it really depends on the size of your liability. And that's also why you want to make sure you file this form or the forms accurately the first time, because it sets the cadence or the frequency of every filing thereafter. And basically, you're going to look at your overall tax liability, or what you think it is. If it's $0 to $200, you're going to file it annually. If it's $201 to $1,200, you're going to file it quarterly. And if it's $1,201 or more, you're going to be filing it monthly. And just as an additional ending note, if the amount of your payment exceeds $5,000, you have to pay it electronically, unless you've got a waiver. But the online process is fairly simple relative to the getting a waiver and going through that process. So again, just make sure you identify your correct filing frequency once you determine that you have a liability, and that's going to be based off of what you believe your overall tax liability is. And it's important just because it sets the frequency and the cadence and the rhythm of every subsequent filing that you've got going on. And that brings us to our third step, which is the actual filing process. Typically, you're going to file online. You can file online as well, just as a note, even if you have less than that $5,000 in tax liability. But all businesses must file and pay through the portal if they've hit that threshold of $5,000 or more in sales and use tax, unless you're granted a waiver. This is most likely going to be the easiest, even if you haven't hit that threshold, because you're just going to use your MyTax portal, which is through the DC OTR that you've already registered for. And as Sonia kind of alluded to in answering the questions, when you go through your initial registration, it will likely pop up with sales and use tax for you if your transactions are going to meet that threshold. So you'll select the summary tab for your business, and when you go to click returns, it'll pop up with the sales and use tax return, and you just follow through the instructions. It's a fairly straightforward process. Again, DC is really nice because they make it easy to do this. They want their money, so they're making it fairly straightforward for you to just go through. And again, you just want to make sure you review all of that information, make sure it's accurate, submit, and then you'll pay online. This is just a brief overview of the sales and use tax rates here in DC. They can vary just depending on what your sales are. So just take a look at this, but also feel free to do some research on your own as well. And the big step is that you just want to, or I guess the reason why this is important too, or some things to watch out for, are penalties and also negligence. It's one reason why you want to make sure your returns are accurate. For a late filing or a late payment, you've got 5% per month in terms of penalties, and that can add up to 25% in penalties. So if you've got a $1,000 liability, it'll be 5% of that. But if you don't pay it for 2 months or you're 2 months late, it'll now be 10. So that's one reason why making sure you have the proper frequency and that you file on time is important. And then you can also have negligence penalties as well, up to 20%, which is why making sure you've got the right information when you're going through the filing process for sales and use tax is really important. So again, just make sure you're paying attention to detail and make sure you're filing on time on the proper frequency. You can file amended or final returns. To file an amended return, you would just file a corrected form and submit that form, a claim for refund, also on the DC portal as well, on the MyTax portal, if you're seeking a refund. And to close out your tax account, you've got to file a slightly different form. It's a final sales tax return, and you have to return your certificate of registration, and that can be done on the DC portal as well. So if you're opening it up or you're filing your first return, go through the DC OTR portal. If you're closing it, go through the DC OTR portal as well. And it's just a slightly different form to close out your account. And that brings us to corporate franchise tax. And Sonia, I believe you're taking that one.
Perfect. Yes. So we all know what income tax is. Basically, DC splits the world into two places. One, corporations, which include S corporations and C corporations. Those file a D20. The other, next slide, is non-corporations, which are, we can skip this one too, next slide. Non-corporations, which go back to sole proprietors, partnerships, LLCs, and those file a different type of form. This again goes through the types of steps, but this is usually handled by your accountant, especially if you have a business, so I don't think we need to go too in depth on this. Next slide. Again, this talks about what an unincorporated business is, and the one thing to note here is S corporations, even though they're pass-throughs federally, are considered corporations for DC income tax purposes, franchise tax purposes. All right, next slide. This gives you some guidelines on when you don't need to file it. Next slide. Okay, real property tax. So if you have real property, if you own like a building or land in DC, then expect to be filing this. One thing I typically see that becomes an issue, especially when we go to businesses trying to get clean hand certificate. Again, DC makes it easy. They open up your tax accounts. But sometimes you might have a real property tax account that you had no idea was open and you haven't been filing. And that will make it that you're out of compliance. So it's a good idea to double check when you get automatically registered for those accounts, that if you don't own real property, you close that account. So that's one thing to note when registering. Next slide. takes a little minute. This goes through the different divisions that oversee it. Next slide. Talks about how to handle it if this does apply to you. Next slide. Okay, personal property tax. This is something that's often overlooked by businesses. There's real property, which is your land or your buildings, something actual structure. And then there's your personal property, which is anything that your business owns: furnitures, computers, equipment, laptops that you provide to employees who work from home, and peripherals and monitors that you provide to employees that work from home. And there is tax, or at least there's a filing that's due on this. There's a certain threshold that if your items are under this amount, you don't have to pay anything, but you still have to file. Okay, next slide. This one is tricky. Unclaimed property. We're just going to touch upon this. Unclaimed property is not technically a tax, but it's another type of filing that you need to make for purposes of in this jurisdiction. Generally, when we see this to be an issue is when it comes to construction or hospitality industries. And that is because unclaimed property is when there are money or assets that the business has that is not theirs to keep. So when it comes to hospitality or construction, generally you have employees who are not paid via direct deposit. They get physical checks. And if those checks are left uncashed, or say an employee was terminated and never picked up their last check, you still have an obligation to make sure that that former employee receives that check. If you're unable to get a hold of that employee, then you're supposed to give that amount over to DC, and DC will keep it in trust in the assumption that the employee will eventually go to DC and ask for it back. There are other things that this applies to, including another type of business that we see this come up in is when there's deposits made. So a lot of haircut businesses, if a customer has to make a deposit of $100 and then they never actually attend their appointment, unless there's certain language in that deposit contract stating that this is non-refundable, you would have to keep that amount and remit it to DC. Or if you have customer credits, say you decided to give someone a refund or a credit to their next purchase, if they never claim that, that's an amount that needs to be remitted to DC. Okay, next slide. And this just kind of goes through when to report to DC if you haven't been able to get in touch for a year or 5 years with the person. Depends on when you need to file something or when you need to transfer that property. Okay, next slide.
Sonia, before we move on, I've just got a couple of great questions about the personal property tax that I want to ask before we get too far from that in our brains.
Okay.
So does this personal property tax apply only to property located in DC? Or does it also apply to things that are located maybe at another business location in Maryland or Virginia?
No, it only applies to property in DC, physically in DC.
Okay. When a business is looking at their personal property and evaluating, trying to figure out if they actually need to pay the tax or if it's exempt, how do they figure out the value of this property? An old computer, a mixer, shelving.
So generally, I would say your accountant will ask you for items that the business owns, or when you're filing your own taxes, you will prepare what is called like fixed assets, like an asset schedule, what is owned. And that requires on certain things depreciation, and so the value will go down. And that's something that you would, when you're filing this form, you would just use that calculation that you used for your federal return to file this form.
Okay. Sounds good. Thank you so much. Those are it for that tax for right now.
Perfect. Okay. And then I'm going to turn it over to Sam to quickly run through the next couple of taxes.
Not a problem. And so the next one is just your DC unemployment insurance tax. Essentially, the unemployment insurance contributions flow through what's called DOES, or the Department of Employment Services, and it's paid by employers, not employees, to fund any unemployment benefits. And if you're any employer with more than one employee working in DC, full-time, part-time, or temporary, you have to go ahead and pay DC unemployment taxes or UI taxes. It includes businesses, household employers, nonprofits, unless you've got an exemption for it, and successor employers. Where it differs from withholding is that it's managed by and structured differently than the withholding taxes. It's managed by a different department. Again, that's DOES. Unfortunately, you do have to go register for them separately. The registration link is online. It's not overly complicated, nothing harder than your DLCP registration. And you're going to file quarterly reports with DOES and pay your unemployment insurance, UI taxes, and any assessments. And essentially, that's going to be a tax on the first $9,000 of each employee's wages. And then there's a 0.2% administrative assessment for new businesses. So if you are a new business or like a new small business here in DC, you are going to have an extra like 0.2% assessment on top of that to pay. And this is, again, just how to file it. It's fairly straightforward. The rate's 2.7% on the first 9,000, and then your 0.2% admin fee, max at $18 per employee per year. That brings us to the next one, which is a ballpark fee. And that's an annual charge that helps fund the construction and renovation of DC's ballpark facilities. If you're a business with more than $5 million in gross DC receipts, again, that's not net, that's gross receipts, so pre-tax, you either must file DC franchise tax or you pay DC unemployment insurance tax. You have to also pay the ballpark fee. Nonprofits are exempt unless you've got $5 million or more in unrelated business income, or UBI. So if you've got business income that's not related to your charitable or nonprofit or like purposes, and it's greater than $5 million, you'll also have to pay that ballpark fee. It's reported on your Form FR 1500, and that's got to be filed annually, and that can also be accessed through your My Portal DCOTR account. So again, it's one of those things that's kind of looped back into that as well. And that brings us to gross receipts tax. And that's a monthly tax on total revenue before expenses, but the benefit is that it's only for certain industries providing goods and services to addresses in the District of Columbia. It does apply to B2B transactions and business to individual transactions. So real quick example, if you're a telecom company that sells phone service to DC business or a business to business transaction, that revenue is going to be taxed as commercial gross receipts. And if you sell it to a DC resident, it's still going to be taxed as non-commercial gross receipts. But on the positive side, there's only a couple of industries that are subject to the GRT here in DC. Those apply to this list right here, just heating oil, telecom, mobile services, cable, satellite, gas, and utilities. So unless you're starting or have one of those, then you will be able to at least avoid the GRT. And that brings us real quick, because I know we are running out of time, but to maintaining compliance. So we've gone through the taxes. Now I'll turn it back over to Sonia just to finish up on the compliance side of things.
Okay, perfect. So we're going to run through this and then we'll hopefully have some time for some more questions. So voluntary disclosures. This is how you clean up and mitigate any past due taxes. So businesses that discover that they maybe you were supposed to be filing sales and use tax, or maybe you didn't realize for some reason, oh, I do have 5 million receipts, I should have filed the ballpark fee, or I have personal property that I never filed. this is what you can do. In exchange for coming forward voluntarily, meaning that you're not under audit, DC hasn't reached out to you saying, why haven't you filed your taxes in this particular area? In exchange for coming forward and telling DC that you had this outstanding balance, you're able to sometimes altogether or potentially, you're able to mitigate some of the penalties that would arise, and sometimes the interest as well. DC will waive penalties, some of the interest, and they'll also give you a limited period of time to where you have to pay those taxes. So say you even had this, you were supposed to be filing for 5-10 years. They'll make it so you only have to pay the past 3 years worth of taxes, and then you can get into good standing. Okay, next slide. These are the qualifications that in order to make sure that you can actually qualify for a VDA in this sort of program. Next slide. And this is how you apply for a VDA. Now, one thing I want to note for what DC does that's a little different from some other states or some other jurisdictions is DC allows you to come forward voluntarily with anonymously. So you do not have to state your business name. But to do that, you need to ask for the services of an accountant or an attorney. You can go to our small business clinic to file on your behalf the facts. And that way you can file anonymously. And if you do get accepted into the program, then you can disclose your name. So that's if you're unsure, if you're afraid to come forward, you're not sure if you're going to be accepted into the program, that's a great way to see if you can be without having any liability. Okay, next slide. Okay, exemption certificates. So we talked about this a little bit when we went over sales and use tax. It's a really important tool because essentially when you don't have to pay, this is when you don't have to pay certain types of taxes because it falls under an exemption. And now instead of paying the tax, you present this paperwork. And most of these exemptions are all available on the mytax.gov site. Okay, next slide. These are the different types of transactions for sales and use tax purposes that generally would qualify as exempt, that you would either need a contract verifying its exemption or a certificate. The one particular thing to note with exemption certificates is it's important and essential to maintain your records and update them on whatever frequency is required by the district at the time of the transaction. There have been several cases where I have had hotels or small inns that had events at their premises by nonprofits, like a nonprofit hosted a gala or something. And they said, yes, we're exempt, we're a nonprofit, let us not pay taxes. And then DC comes back and says they were exempt, but not at the time of the event itself. And then, because no sales taxes were collected, the hotel or inn has to pay sales tax. So it's very important that you make sure you have this certificate in place at the time of the transaction and it's dated at the time of your transaction. And you keep that exemption certificate with the contract that it's for. Right, next slide. This is another type of kind of tax credit that you can take advantage of if you are considered a qualified high technology company, which there's a bunch of qualifications that you need to go through and make sure you are check marking all of that. You self-certify, and if DC agrees that you are a QHTC, you're subject to certain tax credits against your DC income tax, as well as things like you might have a 5-year freeze on paying property taxes. So it's a great thing to take advantage of if you qualify for, but it does have a lot of nuances, and I would recommend definitely talking to our small business clinic or an accountant or an attorney before looking into that. All right, I think that's it. We can stay on for a little bit longer for any questions that pop up.
Great, thank you both. A couple of questions that have come up more than once. For self-employed business owners, Are there any local DC self-employment taxes that they need to worry about similar to on their federal returns?
It depends on your entity structure. Generally, it will require a form that's basically a report that states this is what income was made by your business versus what income you had. But that's really it's going to be circumstance by circumstance. So that's something that I would definitely talk to your accountant about.
Wonderful. Um, we have a couple of businesses that noted they are taxed by the IRS as an S corporation, and they were wondering how they notify the DC Office of Tax and Revenue of that, or if they need to at all.
So DC is different than other states. You do not need to notify DC because DC treats S corporations the same as C corporations. You're going to be filing the same form. But in other states, I would recommend you look at those states and make sure you don't need to notify those states. DC, you do not have to.
Perfect. Thank you. Let's see. Based on what you have seen professionally, is there a certain size or threshold of income or complexity of a business where they really cannot DIY their taxes anymore? Of course, if they can hire someone to help, they should, but is there sort of you really need to at a certain point?
I would say it's not necessarily the size and the amount of revenue for DC, but it's more about the industry and the way you structure your transactions. So one, I would say if you have a storefront, you might want to look at outsourcing your sales and use taxes, and especially if it has various different products. If you have a software-based, if you're in the software sort of industry or government contracting industry, I would also recommend that you have someone at least look through what you've been doing and give you a game plan on how to proceed forward, because those industries can be very complex, even if the amount generated is not that high.
All right. I'm just checking to see if we have any outstanding that are really big for folks. Oh, here's one. If a business does not have any tax liability, they don't actually have to pay anything. For example, the personal property tax, or they had no taxable sales for a sales tax. Do they still need to file the returns with OTR, or can they skip out since they don't owe money?
It depends on whether you, one, are registered for those types of returns, and two, whether you've had a liability in the past. So with a lot of startups, or I've seen some Etsy businesses even that ended up blowing up way later, they may not have enough sales to really be taxable in one period, and then slowly they start having to have sales. That doesn't mean that they can just stop. They just don't pay taxes for those months where they didn't have sales. You still have to file you still have to file a return, and we call it a zero return because you're just reporting, okay, I basically made no money, 000, but here, take it. No matter what, file that return, because it just keeps you in compliance. It's better for audit purposes, and it makes things a lot easier. Even if you don't owe tax, if at some point tax could be due, or you're in an industry where tax would be due, then file the return.
Okay. One final question. If a business doesn't have sufficient money in their business accounts to pay the taxes that they owe to DC, do the owners need to pay that up to the DC government?
It goes back to, it depends on your structure and it depends on which tax it is. Some of the taxes have personal liability, meaning that if you're an owner of that business, you will have to pay the tax. If you're an owner of that business and it's not like a C corporation or an S corporation, you'd have to pay that tax. Or some businesses even have some taxes even have personal liability if you are a C or an S corporation. So if that's the case, I would recommend going to the small business clinic, because it gets murky depending on what type of tax it is and what your business entity is.
Perfect. Yeah. And that is one of those, it really depends,
Yeah.
but it should get paid no matter what. So thank you, Sonia, and thank you, Sam, for today's webinar and all of this information. To everyone listening, you will get a copy of this recording and slides emailed to you, so you can rewatch, look through, share with other business owners and entrepreneurs you know. Also, in our follow-up email, we will include the link to sign up for a one-on-one consultation at the Small Business Brief Advice Legal Clinic. The next clinic will be held in September, and that's where you can get into these one-on-one circumstances and chat about that. We also will be sending, when you log off, you will receive a survey, so please let us know what you thought of this webinar and what else would be helpful there. Thank you all for joining us, and we will see you for our next webinar soon. And thank you again to Sam and Sonia.
Thank you.